Hello, I'm Richard Mize, real estate editor for the Oklahoman and News OK, talking today with Craig Tucker of Price Edwards and Company. He's Senior Vice President, Managing Broker, and an office marketing specialist, right?
We'll accept that, sure.
We're talking about the mid-year office market summary just put out by Price Edwards, hot off the press and online, should be by tomorrow.
Yes.
Correct? And so we're just going to hit some of the high points of the report. And so the first thing I have to ask you is, what are these dark clouds of which you speak right off the bat in this report?
Sure. The first one is fairly obvious to anybody that's lived in Oklahoma City for any period of time. The commodities market here in terms of energy is very cyclical. We're in a downturn right now. We've had prices per barrel below $50 now for a while, or at or below $50. I'm no energy expert. Most people think it's coming back. People differ about when it's coming back and to what level. So as long as energy prices remain about where they are, we could see some fallout from that, as several energy companies have already announced layoffs, and most of that space really hasn't hit the market yet. And in addition to layoffs, some energy companies had stepped out and were building owner-user buildings. So they're going to leave behind vacant space as well. So if the commodity price stays low and they're going to go ahead and move, and you have any more layoffs, we could see vacancy rates tick up by 3%. And in addition to the owner-user buildings, you've also got some new inventory coming online, of course, with 499 West Sheridan, which is a 663,000 square foot building, I think. Devon will occupy roughly half of that. There's another group that's rumored to take over 100,000 square feet. We think that'll come to fruition in the next 30 to 60 days. So they're still going to have a couple 100,000 square feet to lease, and in addition to that, Devon's going to leave 250,000 square feet behind when they move. But we've seen that movie before. It happened 3 years ago when they built their $1.7 million square foot, tower, and vacated nearly 900,000 square feet then, and the market absorbed that and really never missed a beat. Of course, we didn't have $50 oil then either.
Correct. What else is going on downtown? Downtown has become our crown jewel. So what else is at play downtown looking ahead to the next 6 months?
Well, of course, you've got the Sandridge campus coming online. I say online, not necessarily in terms of available office space. It's for sale right now. That will tell a lot about how the national investors really see Oklahoma City and the company itself. It's an assemblage of 3 different buildings. One's fully occupied. One is completely vacant that Sandridge built as their amenities building and never occupied, and the other's their tower, which is nearly 500,000 square feet in itself. But they're going to do a sale leaseback as long as they can remain a going concern and stay healthy. That's never going to hit the market. So, but their stock price isn't the highest right now, so that's a little bit of a concern. Right.
In the report, you don't even mention another 600-pound gorilla, I suppose, which is First National Center.
Which, and frankly, I've quit mentioning it because I've mentioned it for so long, people are tired of hearing and reading about it. But the good news is it looks like that's finally going to come to a solution, we believe. People in the know say that deal's still moving forward. That could happen in the next 60 to 90 days. If that happens, that really kind of makes up for a lot of the dark clouds, because that's a 1 million square foot building that they don't plan to keep as an office building. So there's 1 million square feet of inventory that gets absorbed in a hurry.
That thing has flipped back and forth on and off the rolls 2 or 3 times since I've been here, I think.
Well, we've kept it on the rolls, but we've changed the size of it because at certain points the east tower couldn't be occupied because it was full of asbestos and things like that. But it's such a big building, it can affect the numbers in a hurry.
Talk about the northwest area of town, the northwest submarket as y'all define it. First, tell me what area, give me some borders,
typically
some streets,
northwest submarket, you kind of think of, let's go from Penn Square north and west, really would be the easiest way to describe it. Go out Northwest Expressway, go straight up, really kind of shift a little over closer to May maybe, and go straight north. Takes in all the Memorial area, which has seen the bulk of development activity.
And it's heavy oil and gas as well.
It's very heavy oil and gas, so it has more exposure. We know of 3 oil and gas tenants that are either moving into their own buildings or vacating a building and closing their office. They're going to throw a 250,000 square feet on the market. However, there's a lot of big users looking for space out in the market today, so you know, whatever spike that is, we think it could be short-lived.
Speaking of that floor plate, that's still in downtown. That's still an issue, isn't it? There's demand for it. That's just not there.
Yes, downtown vacancy ticked up a little bit to 3% Class A vacancy. That's still next to nothing. If you're a significant user at all, you're not going to find a good Class A alternative.
It's kind of like inflation. Everybody says they don't want any inflation, but you have to have a little inflation. You have to have a little vacancy to have any movement in the market.
Absolutely.
I mean, it moves around.
And you have to add inventory, and it has to be absorbed, and you know, we do that, and it just kind of keeps ratcheting up as you go.
Can you talk about rent rates?
Rent rates, surprisingly, with vacancies ticking up a little bit, rent rates have continued to go up. Downtown, for instance, Class A rental rates are about $3.50 higher than they were just a year ago.
Wow.
Yeah, there's some significant growth.
It's like an 18% jump or something,
yeah,
isn't it?
particularly at the high end, there's a lot of rent growth, and across the board there's been rent growth. I think the average rental rate over the last year has gone up about 50 or 60 cents a foot.
So if we wanted to summarize, we've got dark clouds on the horizon, but it hadn't started raining yet.
No, and in Oklahoma we've seen that movie
That's
before
right.
also. We can get dark clouds, and we fight our way through it, and sure enough it's dry.
That's right. Thank you, Craig Tucker with Price Edwards and Company. I'm Richard Mize with the Oklahoman and News OK.